Hello, this is Abhishek Sengupta and welcome back. We are on with our startup series. Now, in our previous episodes, we have covered a lot of other topics about startups. Now, in this episode, we will cover break-even. Now, once the sale has already started, the revenue will start coming in. Now, once the revenue starts coming in, an entrepreneur has to find out the break-even point. Now, what is a break-even point? Break-even point is the point of no profit and no loss. This is the point where the revenue exactly covers the cost of production. Now, it is important for an entrepreneur to find out this point. Why? Because if you are going upward from this point, you will have profit, and if you are going downward from this particular point, you will have losses. So, finding out this point is an important, and not only important, you have to keep following this point throughout your journey of entrepreneurship. So for a startup founder, it is important to get this point and note this point and regularly follow this point. Now, the question comes, why this point is so important? Why everyone keeps stressing on this point? The clear answer for this is the prime aim of a startup founder or an entrepreneur is to cover the cost of production or cover the cost of running a company. So, in order to do so, one has to find out the break-even point. This is the point when an entrepreneur covers up the cost of running the company for that particular period of time. So, break-even point is again time specific. Why it is time specific? Because the break-even point, whatever you take it as, is dependent on time. You can find a break-even point for 1 year. Now again for the next year, you have to find the break-even point. Now, break-even point can also be calculated on a monthly basis, quarterly basis, half-yearly basis, as well as yearly basis. So, break-even point is a very important criterion for the business, for entrepreneurship, or for startup journey. Now, if you cross across the point, you will earn profit. If you do not cross this point, you will suffer losses. So, break-even point is the key mantra after the sales starts. This point is also important as an entrepreneur comes to know how much sale is required to cover up the cost of production. Next point, which is important, is the dynamic approach for break-even. So break-even keeps on going up and going down depending on the production, depending on the cost of production, and depending on other vital circumstances. Now, you always need to keep calculating. If you have calculated the point in a wrong manner or incorrect manner, you will suffer in your startup journey or your entrepreneurship journey. So it is equally important to keep following this point, do the exercise multiple times in a year to find out where does this point is standing at that particular point of time. I have already mentioned that break-even point is time specific. The dynamic nature of the break-even point must be studied on a regular basis. Now, this exactly tells a founder that how much sale or how much production is required to cover up the cost. At the same time, it also gives an indication how much the cost should be optimized in order to gain quick profit. Hence, it helps a startup founder or an entrepreneur to restructure the cost and optimize the sale price. Why this is important? Because at times what happens, even if the sale is going good, you might not be able to touch the break-even point. The sole reason for this could be your improper costing. I mean, your cost is going quite high. The production cost is going quite high. Hence, it is important you should follow this point. Again, I am saying, please follow this point on a regular basis, on a time-bound manner. Although this point is a vital point, or it's a vital chapter in the journey of entrepreneurship or startup journey, but still this cost or this particular point has got a lot of limitation. Now let me count certain limitations. Number one, it takes fixed cost as constant. Many a times fixed costs are not constant. It keeps going up at times, it goes going down at times. On every year basis, we keep account of the fixed cost. Probably in 1 year fixed cost could be low, other year fixed cost could go up. So likewise, but this particular concept takes the fixed cost as almost same or constant. So this was number one. Number two is that it takes variable cost as constant. Variable cost, by name it suggests it's a variable in nature. It keeps going up, keeps going down based on production and certain external circumstances. So while calculating the break-even point, fixed cost and the variable cost both are taken as constant. So that's why we say you should keep chasing the break-even point on a regular basis. Point number three is it assumes the goods produced is equal to the goods sold. Many a times this does not happen. Many a times goods produced are not equal to the goods sold because there are certain laws during post-production phase. At times, the quality control takes certain goods out. At times, certain number of goods are damaged during logistics phase or during the transportation phase. So the goods produced are always not equal to the goods sold, but the break-even point assumes that. In spite of limitations, this is a very, very vital concept. This is the most studied concept in the world of business. A startup founder must keep a close eye on the break-even graph. The graph or the point on the graph can go up, can go down. Still, the regular follow-up of this point is important. If you are not following this point, probably you might suffer loss at any point of time because you are not aware how much sale you require to cover up the cost of production. That's all for today, and we'll be back with more such kind of episodes. Till then, stay connected, stay tuned, and do not forget to like, subscribe and share this. Have a great day.